when I got up to current trading, what it did for me was it made me realize what I needed to do right now. Interesting exercise, isn't it? So here we have what? Moving averages are coming down. Let's take a look. Do we have any radical differences here? There's the moving average. There's price. Yeah, we do. Do we have a big bar? Sure, right here. Boom, right there. Bang, big bar closes in the upper half of the range. Whoops, price is going crazy. So, where do we count? 1, 2, 3, 4. Again, market's taking off. Most think, crap, I missed another one. No, this is good for us. Why? Volatility. Big price change, good. Okay, so short trade would be down here. Long would be up here. The market, if we were looking at this as it was happening, there would be the start. So here's our big bar. 1, 2, 3, 4. Boom. Aggressive trader can do what? Go long above there. Bang. Next day. That's actually pretty healthy profit. The market jumped from an entry of about 588 up to 680. So 100 pips in one day. But again, a trend trader, you're going to have to watch out and be willing to take drawdowns. This one went all the way back down to break even. At this point, we're thinking, possible weave. Also, we're thinking downtrend, right? See what happens. Had a hand right here, another entry point. Boom, stop. So a little bit of profit between here and here, and this one was a little bit of a loss. This one probably was about break even. So what are we seeing? Well, price is going sideways, but you see how these aren't really weaving. Why are they not weaving? Look at the size of these bars, everybody. Look at this. These are big bars. There's a lot of volatility in here. You get a weave when the bars start going like this. Really small bars. Small bars. Where the market really isn't doing a whole lot. Okay? Not this, where there's all this volatility. You're not going to get the weave over here very much, are you? Okay, so what are we looking for then? Well, we're looking for the hands to execute. There was a hand. Now some of you might be saying, well, yeah, but look, there's a hand as well. That may be true. Not that may be true. That's true. But one thing that you might consider is that look at where it is. It's inside of the moving average, isn't it? Okay? It's inside of the moving average. If you take a line across here, when it gets hit, is that not inside of the moving average? Absolutely. Remember I talked about that. Conservative traders can wait for wait that when the signal is hit, it has to be above or below the moving average. Look at that. It's not. It's inside of it. So, for the conservative trader, that would not be a valid signal. For the aggressive trader, well, you're just going to get stopped out again. Remember, we talked about that. But remember, don't panic, I showed you how even the aggressive trader can wind up getting in even earlier on the trend. So when price trends, and remember, this is absolutely critical. It's critical for you to remember this. Markets do trend. If there were no trends, we would not need markets. That's a beautiful thing. Okay, so we can count on that. Remember James talking about having faith? You've got to believe that. You've got to believe that the markets are going to trend. You have to expect them to trend. Okay, so let's continue. All right, boom. Conservative trader, you had an opportunity right there. Yes, you could have entered in twice, would be the answer. You could use this as an entry in this one. Why? They're both above the moving average. See? Drew the line across. They're above it. Look at this. Boom. Wow. Now there's some profit there. Huh? Okay, now this is live trading. This is back in August. So let's just use the one entry that's a high of 37.19.